Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in China, and specifically to talk about the real estate sector. Now, if you follow the channel, you'll know that we've talked about Chinese property a lot over the last few years. And the reason that I've been doing that is because the real estate sector equates to around 25% of total Chinese GDP. That is a huge percentage. It's a much bigger weighting than most other economies in the world. If we compare it to the USA, real estate equates to around 15% of GDP. And the reason that it's important in China is that over the last 20 years, the fast growth of the real estate sector has really been fueling the growth of the overall economy. But for the last few years, real estate has gone into free fall, and that's now dragging down the overall performance of the Chinese economy. And in 2024, there is a real chance that China is going to miss its target of 5% if the property sector continues doing what it's doing right now. And in today's video, I want to talk about the level of unsold apartments. Up until this point, I'd been focusing in on the fact that a lot of the big developers had pre-sold properties to Chinese nationals. They'd taken their money. A lot of those Chinese nationals had borrowed mortgages in advance of making those purchases, and those apartments were never built. And so we've got a lot of people in China paying mortgages on property that doesn't exist. And I'd been talking about the fact that developers needed to find the cash to be able to complete those builds, to be able to then hand them over to those nationals. But what's now been revealed is that the property developers are sitting on an enormous inventory of property that has been completed that they're unable to sell. And the number of apartments is 60 million. And just to put 60 million unsold apartments into context, that equates to the total population of South Africa and is more than the population of Italy, Spain, Argentina, and Australia, just to name a few. There are hundreds of countries that have a population less than 60 million. So this is a major crisis, and the authorities are now trying to sort this out by introducing a variety of initiatives. And in today's video, I want to look at the level of stock of unsold housing right now, talk about those initiatives and discuss whether or not this is likely to succeed, and if it doesn't, what the implications are going to be for the Chinese economy. So in today's video, we'll have a look at the current status of the property market. We'll have a detailed look at the inventory that the property developers are currently sitting on. We'll look at the breakdown by cities, and interestingly, some of the biggest cities are struggling to shift that stock. We'll also talk about the initiatives that have been introduced by the Chinese authorities, and I'll talk about whether or not I think they're going to be successful and how long it's going to take to clear this backlog of unsold property, and then what the overall impact of all of this will be on the Chinese economy in 2024, and what the impact of that will be on the global economy. But before we get started on all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. It really means a lot to me. If you're a long-term supporter, if you've signed up either through Patreon, where you can get early access to my videos and also watch them advert-free, or YouTube membership, where you'll also get early access, or buy me a coffee membership, thank you for that support. It really helps to keep me going, keeps me motivated, keeps me thinking up more videos on a daily basis. And if you've sent me a YouTube super thanks or bought me a coffee recently, thank you for the time and effort that you've taken to do that. I see every single one of those messages. I do read them. I don't get a chance to respond to all of them, so apologies for not sending you a response, but thank you for sending that support. It really does help to keep me going. The fundamental problem with the Chinese property market right now is that there's been a complete loss of confidence amongst buyers. In the first 20 years of this century, Chinese buyers couldn't get enough of property. People were literally falling over themselves to buy property, and many buyers bought multiple properties. Investment into property became the big thing. Everybody wanted to put their money into the property sector because they believed that prices would only ever go up. However, in order to put a stop to this, President Xi brought in a new strategy which was focused on homes for living. He wanted people to buy property to live in rather than buying for investment purposes. And in order to bring things back into line, he introduced a new policy called the Three Red Lines, by which property developers had to prove that they were not over-leveraged. And the introduction of that policy marked the end of the fantastic growth in the property sector in China. And over the last 3 or 4 years, we have seen the market nosediving. And the problem that the developers have right now is they are sitting on over 60 million unsold apartments. And the problem that you've got in a falling market is, how do you persuade people to buy property if they think that prices are going down? Because rather than buying today, you would wait. And in a falling market, it's very difficult to persuade investors to step in, because if you're watching prices constantly going down, why would you put your money into that market? This chart shows the year-on-year movement in property prices in China, and we've got 2 lines on this chart. The black line shows the average price of newly built housing, which historically made up the majority of the property market in China, and the yellow line shows second-hand housing, so basically housing that's being sold by the former owner. So what you can see here is that over the last 13 years, there have actually been 2 previous periods when property prices went into decline. The first of these was in 2012, when there was a slight drop in prices. They fell by a maximum of 1.8% for second-hand housing and 1.3% for newly built housing. However, that was a relatively short-lived market, and as you can see, there was a strong bounce back in prices. And in 2013, newly built houses were increasing by almost 10%. There was another and more serious dip in house prices in 2015, as a result of the global slowdown at that time. There was a slowdown in the global economy that affected every country in the world. And in the spring of 2015, new house prices fell by almost 7% and second-hand houses by around 5%. However, once again, there was a strong bounce back in terms of prices in China. And by the end of 2016, new build housing was increasing by almost 11% and second-hand housing by 8%. And the increase in property prices in China peaked in April 2019, when new build prices increased by almost 11.5% and second-hand prices by 7.9%. However, since that point, over the last 5 years, we have seen a reduction in the growth in house prices, and they actually moved into negative territory in April 2022, and they have remained in negative territory over the last 2 years. And you can see that the most recent figures show that new house prices are falling by 3.5% year on year and second-hand house prices by 6.8%. And this really follows up on the point that we've just been discussing about the loss of confidence in the market. Chinese consumers no longer believe that house prices can only go one way. And when you take a step back and look at this graph, the difference on the right-hand side of this chart, what's been happening over the last 4 or 5 years, is that this is a long-term trend. Prices are now in decline because of that loss of confidence. When you look at what happened in 2012 and 2015, they were short-term movements as a result of what was going on in the wider economy. What we've got today is a loss of confidence in real estate, and that's a fundamental problem, not just for the property developers, but also for the Chinese economy. And this chart shows the year-on-year movement in new residential housing starts, so the number of new developments that property developers have started, dating back to 2018. And the scale on the right-hand side of this chart goes from minus 40% at the bottom to plus 80% at the top. And what this chart shows is that following the introduction of the 3 red lines policy in 2020, there was a sharp fall in the number of new housing starts. It fell by 44% at the start of 2020 and remained in negative territory throughout the whole of the rest of that year. However, in 2021, there was a bounce back as the Chinese authorities realised that the property developers needed some assistance, and so some capital was made available to some of the developers. And in February 2021, there was a 68% increase year on year in new residential housing starts. However, what you need to take into account here is that that figure is measured against the previous year's figure when there was a 44% fall. So while 68% sounds impressive, it's being measured against a lower figure from the previous year. So percentages can be a bit misleading when you're looking at graphs like this. However, what you can see is that that recovery was very short-lived. And by August 2021, the number of new housing starts had moved back into negative territory and it's remained in negative territory over the last 2.5 years. And the most recent data shows that new housing starts are down by 29%. And once again, you need to take into account that that's measured against a fall from the previous year. And so the year-on-year cumulative impact is that we are seeing a huge reduction in the number of new starts. And the reason that this is relevant is because there are currently 60 million unsold apartments, and it isn't because the developers are building millions of apartments right now. These unsold apartments have been constructed over the past 5 or 6 years. In a previous video that I posted, I talked about the fact that S&P, the rating agency, had highlighted the risk in Tier 3 cities of being able to clear the backlog of unsold properties. However, it now appears that the backlog isn't just contained to Tier 3 cities, it's actually hitting all cities across China, including the most attractive and the largest Tier 1 cities. This chart shows the estimated time to sell the new home inventory in China's Tier 1 cities. So these are the largest and most attractive cities that people want to move to in China. And the scale on the right-hand side of this chart is measured in months and goes from 0 at the bottom to 30 months at the top. And the way that this graph has been constructed, it looks at the amount of unsold property, so the current level of inventory, and applies the current rate of sales to give us a figure that tells us how long it's going to take to clear the backlog of sales. If you stopped building new property today, how long would it take to sell all of the stock that you currently have on your books? So if we look at the situation in May 2017, 7 years ago, you can see that the total stock on the books at that point for Tier 1 cities equated to around 8 months worth of sales. So it would have taken 8 months to sell all of those apartments. And if we look at the period between May 2017 and August 2021, so that 4-year period, you can see that the average time to clear the stock of apartments was sitting at around 10 months. There were periods when it was higher, such as April 2018 when it increased to 17 months, and March 2020 when it increased to 21 months, and other periods when it dropped down below 10, but on average it was bouncing around 10 months. So if we assume that 10 months is the average amount of stock that the property market should be holding, if we now look at what's been happening over the last 2.5 years, you can see that the average time to clear the stock has been increasing steadily, and the most recent figures show that it's now sitting at 27 months, which is almost 3 times higher than the long-term average. And what we're seeing here is a combination of both a reduction in purchases because Chinese consumers are worried about what's happening in the property market, and an increase in stock. Where developers are completing their apartments, they can't sell them, and so it's just being added to the 60 million apartments that are already sitting on the books. And this chart provides us with a breakdown of the worst performing cities in China. And we've got 2 different bars here. The black bars show how many months it will take to sell the current new home inventory at the current sales rate, and the blue bar gives us the absolute square meterage of all of that stock. And what you can see here is that the worst performing city in the whole of China is the capital city of Beijing, which has a population of around 22 million people. This is an absolutely huge city. And the current level of unsold property is 12.5 million square meters, and it's estimated that it will take almost 49 months to clear that stock. So that is over 4 years at the current sales rate. The second worst performing city is Wuhan, which reportedly was where COVID originally broke out, and it has 18.7 million square meters of unsold property, the most out of any city on this table. And it's estimated that it will take 42 months, so 3.5 years, to clear that stock at the current sales rate. And if we take a step back and look at how long it's going to take to clear the current level of stock, we've got 4 major cities, Beijing, Wuhan, Fuzhou and Shenzhen, where it's going to take more than 3 years, another 7 cities where it will take more than 2 years, and for the remaining 8 cities, it will take somewhere between a year and 2 years. So what this tells us is that there is far too much stock currently given the level of activity in the market. In order to stimulate the market and encourage buyers back to buying property, the Chinese authorities have introduced a variety of initiatives, and these include lowering mortgage rates, making it cheaper for people to borrow to buy property, reducing the amount of the deposit that you need to put down when you're buying property, and also the Chinese authorities have given 300 billion yuan, which is around 42 billion US dollars, to local authorities and instructed them to start buying some of these unsold apartments. So this is basically a backdoor way of nationalising this unsold stock. But when you're looking at 60 million apartments, $40 million isn't going to cut it. It is nowhere near enough to clear that backlog. It's estimated that the local authorities would need more like $1 trillion to clear all of that backlog. So China is making some efforts to try to do something about this, but this is very small beer at the moment. And what's interesting is that the initiative that they've just launched has actually been running in some cities. So let's have a look at the results of those trials. These charts show the year-on-year percentage movement in housing sales in 5 cities in China where the authorities have been running trials where the local authority is allowed to buy property using loans provided under the authorised scheme. The scale on the right-hand side of these charts varies, but shows the percentage movement in sales and goes from a minus percentage at the bottom, 100% for 4 of these charts, and minus 200% for Chongqing. And the upper end of the scale ranges from 100% for Jinyan to 400% for Chongqing. Now, we don't have an exact start date in terms of when these trials were launched, but it's estimated that they've been running for at least 6 months. And under the terms of the trial, the state-owned People's Bank of China provides funds at an interest rate of 1.75% to local banks, and those local banks then lend to the city at 3%. So there's a guaranteed profit in this for the local banks, providing that the scheme actually makes a profit. It has to prove that it's a profitable enterprise, otherwise the local bank will lose any money if there is a loss at the end of the transaction. Now, according to the data that's been released, the 5 cities shown here have borrowed 4.4 billion yuan, which equates to around $630 million, under the scheme. And as you can see, the results have been hugely underwhelming. In 3 of the cities, Tianjin, Guangdong and Jinyan, there's actually been a fall in total sales. So despite the fact that the local authorities have been moving into the market and buying this unsold property from developers, there hasn't been a consequential increase in real buyers coming into the market. There's actually been a net reduction in real buyers. So even though the local authorities are trying to stimulate the market, it isn't working in those 3 cities. In Chongqing, it's been flat, so there's been no percentage increase. And the only city that's seen an increase in sale is Fuzhou. But if you take an overall assessment of the 5 trial cities, this trial is not working. And the reasons that have been cited for the failure of these trials is that the local authorities are cautious about taking on the debt. They don't want to burden themselves with even more debt. The property developers are reluctant to sell at a huge discount that is being demanded by the local authorities, so they're basically not getting anywhere near the price that they want. And also, when the local authority is buying this property, they're converting it into social housing, affordable housing, which is apparently dragging down the price of other apartments related to that building. So basically, if you turn one apartment into social housing, it becomes less attractive to buyers and therefore prices start to fall. So it's actually having a counterproductive impact on the local market. So what's the summary and conclusion today? Well, I wanted to post this video because the amount of unsold stock in the Chinese market is absolutely mind-bending. 60 million apartments. As I said right at the start of this video, that's bigger than the population of a lot of countries in the world. In fact, most countries in the world have a population of less than 60 million. So this is an enormous amount of unsold property. And I think this is really interesting because Up until this point, we'd been talking about the problems in the real estate sector being driven by the fact that the developers couldn't get enough debt to be able to finish the apartments that they'd pre-sold to a lot of Chinese nationals, and so those people had lost confidence in the market and prices had started falling. But what we're actually seeing in today's video is that there is a huge amount of unsold stock that nobody wants to buy at the prices that they're being advertised at. And we've already got record falling prices. So in order to clear this backlog, prices would need to come down even further. But the problem with that is that it will drive more people out of the market, because if you watch a market going down and down and down, the last thing that you want to do is put your life savings into it. In fact, at the moment, most Chinese nationals are trying to get their money out of property to protect their own investment. And so we've got a real difficult situation here. And of course, the Chinese authorities are aware of this. They know that there's 60 million apartments that have been built or semi-built that are sitting around vacant with nobody wanting to buy them. So they've introduced a variety of different initiatives. And two of those initiatives are reducing the cost of mortgages and reducing the deposit that you need to buy a property. But as we've discussed before, it wouldn't encourage me to buy a property if I'm watching a market falling month on month by 2 or 3 or 4%. The last thing that I want to do is borrow money to dive into that market, because all I'm going to do is create a loss for myself, and I'm still going to have to pay back the mortgage, and potentially I could get to a situation of negative equity where the property is actually worth less than the amount I've borrowed. If I take an 85% mortgage and prices fall by 20%, then I'm going to owe the bank more than that property's worth. And of course, I won't be able to sell it anyway, even if I wanted to, because I'd just be adding it to the 60 million of unsold properties that are already out there. So this is a really tricky situation for the Chinese authorities to try to turn around. So what they've tried to do is come up with a clever initiative whereby the local authorities will be given a chunk of cash so that they can start buying up this unsold property, convert it into social housing, let people live in it, and that will clear the backlog. But it's not going to solve the problems in the market. As we saw from the data, the 5 cities where they've been running this trial, in 4 of those cities there hasn't been an increase in sales. In fact, in 3 of them there's been a significant reduction. And the reasons for that are multiple. Firstly, the local authorities are worried about taking on more debt because they've already got about 9 trillion of debt, and I've got a video coming out on that soon, so watch out for that. So those local authorities are already sitting on the verge of bankruptcy themselves, so they don't really want to be going and buying property. But the property developers don't want to do those deals either, because the local authorities are trying to get them at a cut price. They're demanding a huge discount against the sales price in order to make that purchase. And of course, from the developer's point of view, all that's going to do is crystallise more losses. And for a lot of those businesses, they're sitting on the verge of liquidation and bankruptcy anyway. So selling a whole lot of their existing stock below their book value potentially means that that could accelerate the demise of those companies. So neither side is very keen on doing these deals. But it also seems that where the local authority has done deals, it's actually having a negative impact on the local market, because they're converting those apartments into social housing and letting people from the poorer sections of China move into them. And that's driving down the price of the rest of the apartments in that building, because people don't want to buy if they think that the whole apartment is going to be filled with social housing. And so there's also this negative implication that the Chinese authorities haven't thought through. Now, maybe the Chinese authorities are happy because they think that their social housing situation actually improves the living situation of some of the people in China. So there's a different aspect that they're looking at. But in terms of fixing what's going on in the property market, improving sales and increasing prices, this initiative isn't working. And as I said right at the start of today's video, the property sector equates to 25% of China's GDP. And if it continues moving in the same direction it's in right now, if we have falling sales and falling values of properties, then that means that the sector isn't going to contribute 25%. And so China hitting its 5% growth target for 2024 means that it's going to have to see a massive increase in other sectors in the economy. And that isn't happening at the moment either. So the overall assessment right now is that the 5% target looks very challenging from China's point of view. It doesn't look like it's going to get there. And if it doesn't get there, then that means that we'll see a relative contraction in the Chinese economy. And of course, that's bad news for China, but it's also bad news for the global economy because China is the second largest economy in the world by some way. It purchases a huge amount of commodities and raw materials all around the world. And so if China does contract, that means there'll be less purchases, there'll be less sales for other countries, and so there will be a knock-on impact for the global economy. So the overall summary of today's video is that the property sector in China continues to struggle. There are over 60 million unsold apartments in China right now. The Chinese authorities have come up with a number of initiatives to try to solve the problem. It doesn't look like those initiatives are going to work. That means that the sector is unlikely to contribute as much as it did in 2023 to the Chinese economy. That's putting pressure on China's target of 5% GDP growth for 2024. If it misses that target, we're going to see major problems in China, and that will have a knock-on impact to the global economy. So hopefully you found today's episode useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.